It was a pleasant Saturday evening when Nand and Aviraj met at their favorite cafe after work. Nand looked thoughtful as he stirred his coffee. "What's bothering you?" Aviraj asked. Nand sighed. "I've been saving money for the last 3 years. Everyone says real estate is one of the best investments, but property prices are so high that I can't even think of buying an apartment or a commercial shop. Does that mean I have to wait another 10 or 15 years before I can invest in real estate?" Aviraj smiled. "Not at all. There's a way to invest in real estate without actually buying a property." Nand looked surprised. "Really? How is that possible?" "It's through something called a real estate investment trust, or REIT. I've heard the name before, but I never understood what it actually is." Aviraj leaned forward and began explaining.
Imagine that a company owns several premium commercial properties, large office buildings in Bengaluru, IT parks in Hyderabad, shopping malls in Mumbai, warehouses near Delhi, and business parks in Pune. These properties are rented out to companies like Infosys, TCS, Google, Amazon, banks, retail brands, and many other businesses. "The tenants pay rent every month, right?" asked Nand. "Exactly," Aviraj replied. "Now imagine that instead of one person owning all those properties, thousands of investors pool their money together. The company creates a REIT, and the money collected from investors is used to own or acquire these income-generating properties. So each investor owns a small part of those buildings? Yes. When you purchase units of a REIT, you become a partial owner of the real estate portfolio." Nand asked, "Who ensures that these companies don't misuse investors' money?" Aviraj answered, "In India, REITs are regulated by the Securities and Exchange Board of India, SEBI. SEBI has laid down strict rules regarding how REITs operate, how they manage properties, how much income they distribute to investors, and what kind of assets they can invest in." That sounds reassuring. It is. REITs are also listed on stock exchanges, such as the NSE and BSE, so you can buy and sell their units through your demat and trading account, just like shares. Nand looked curious. "If I buy REIT units, how exactly do I make money?" "There are mainly two ways," said Aviraj. "First is regular income. The commercial buildings owned by the REIT generate rental income. Since companies lease offices for several years, the rental income is generally more stable than residential rentals. The REIT collects rent from all the tenants. After paying property expenses and loan obligations, a large portion of the remaining cash is distributed to investors." "So I receive periodic distributions?" "Exactly. Depending on the REIT's performance, investors receive regular distributions that may include rental income, dividends, or interest." "And the second way?" "Capital appreciation. Suppose you purchased REIT units at $500 each. If demand for commercial real estate improves and the REIT performs well, the market price could rise to $600 or $700. If you sell your units, you earn a capital gain." Nand smiled. "This sounds much easier than purchasing an apartment." Aviraj laughed. "Think about buying a flat. You need a huge down payment, a home loan, registration charges, stamp duty, maintenance costs, repairs, insurance, and finding tenants. If your tenant leaves, your rental income stops." That's true. With REITs, professional managers handle everything. They negotiate leases, maintain buildings, collect rent, and manage tenants. As an investor, you simply own units and receive your share of the income. So I don't have to worry about leaking roofs, repairs, or tenant disputes? Not at all. "Let's take a simple example," Aviraj continued. "Suppose a REIT owns 5 office buildings worth 20,000 crore rupees. These buildings are leased to multinational companies. Every year, they generate substantial rental income. The REIT distributes a significant portion of this cash flow among all investors. If you own 500 units of the REIT, your share of the distributions depends on the number of units you hold. So, even though I don't own an entire building, I still receive income from commercial real estate?" Exactly. REITs offer several benefits. You can start investing with much less money than buying a property. You get exposure to premium commercial properties that most individuals cannot afford. The units are traded on stock exchanges, making them relatively liquid. Professional fund managers handle property management. Investors receive regular income distributions. Your investment is diversified across multiple properties instead of depending on a single building. Everything sounds perfect. There must be some risks. There are, Aviraj replied. If businesses vacate office spaces or economic conditions weaken, rental income may decline. If interest rates rise, REIT prices can also come under pressure. The market price of REIT units fluctuates daily because they are traded on stock exchanges. Like any investment, returns are never guaranteed. So I shouldn't invest blindly. Exactly. Always study the REIT's portfolio, occupancy levels, quality of tenants, debt, and past performance before investing.
Are there many REITs available in India? Asked Nand.
Yes, Aviraj said. India has listed REITs that own high-quality commercial office parks and business campuses leased to well-known companies. Each has a different portfolio, occupancy level, and distribution history. Investors can compare them before making a decision.
So today I've learned that real estate investing doesn't always mean buying land or a flat. Through REITs, I can become a part owner of large commercial properties, earn regular income from rentals, and also benefit if the value of my investment grows. Aviraj nodded. That's the idea. REITs make commercial real estate accessible to ordinary investors. They're not risk-free, but for someone seeking diversification, potential income, and exposure to real estate without the burden of owning and managing property, they can be an excellent addition to a well-balanced investment portfolio. Nand left the cafe feeling more confident. Instead of waiting years to buy a property, he now knew he could begin his real estate investment journey with REITs, starting small, learning continuously, and investing wisely. Thank you for watching this video. Remember, informed investing is the first step toward building long-term wealth. Stay curious, stay invested, and I'll see you in the next video.